Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Monday, March the 4th. The year's 2024. Let's talk trading. Weekly open and gap with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And since this is, I believe, the second trading day of the month, let's just have a reminder about risk management. Never lose more than you're willing to lose on any one single trade. So let's go ahead and take a quick look at the weekly. We can see from the dashboard all gaps have filled, and we're 25 pips above the weekly open, about 3 pips off the high, and looks like price is rising, and 37 pips off the low. We're putting in the opening range for the week. We broke through the opening range for the month, which was Friday's high, at 2663. We're now at 2680 and rising, 2681. And we are within the opening range for the year. And speaking about the year, we are 40 pips below the yearly open, 105 off the high, and 163 off the low right now. If we zoom out to the monthly, we can see we're in the upper wick zone of the previous months, and looks like the last month's candle was a lower candle, lower high, lower low, but right now we're 58 pips above that monthly open. And looking at the inside bar chart, you can see we've got lots of inside bar action across the pairs, and I mean there's a lot of blue and gray on this screen. We are in the inside bar, the daily inside bar from 4 days ago, the weekly inside bar from 1 week ago, and the monthly inside bar from 2 months ago. So I guess we'll be looking for some inside bar breaks this month. Today's range, though, is only 39 pips. We have 3 pairs over 100 pips, with the Swiss yen leading the range with 146 pips. Yeah, it looks like we're breaking out of the high, or just trying to break out of the high from 2 trading days ago and 3 trading days ago. Buy zone, we're above the weekly / daily open today. Let's see, we had a trigger at the beginning of the Asian session, but I don't like trading the beginning of that session because the spreads are really wide, at least on my broker. It's kind of ridiculous. They're pretty much untradeable. With a range of less than 40 pips, of course the range for the rats are too low. We're in the upper rat zone, but there's like no separation between the zones. So looking at the pivot trading plan, Bambino flex indicator is pointing south. Price near R1, pivot trading plan says to go short, and we are right at R1. 0.4 pips above it. So you might want to look for a short. H4 candles green, so I'd be careful right now shorting against, especially this is a new H4, so definitely be careful. We've taken out the monthly pivot, we've taken out this week's pivot, and we have not taken out the daily pivot. We missed it by looks like 5 pips. We are been in and out of the upper wick zone here, and it looks like we only went, just like we broke into it and then fell on that first H1 candle of the day, and then we've it was testing it, looks like during the latter stage, beginning of the London session, but we're now above it by about, which is the previous trading day's high, by about 16-17 pips. And let's see, on the simple PA chart, you can see for the past few hours we've been dancing around that psychological 75 line price. It seems to be a magnet, so something's going to have to give there. Oh, see, it looks like we just had a highest low trigger about 3 minutes ago to the south, and that looks like that was probably good for about 3 pips. And other than that, nothing earth-shattering that I can see. Walmal, what can you add to the discussion?
I think the only reason why the Swiss franc moved as much as it did is because they had red news today, and they're the only people that got red news. And the thing is that it was slightly better than expected, but nothing of any consequence. And so it's just kind of, I think it's just a dead week, just a small moving week, or at least it's going to be. Tomorrow we're going to start getting a little bit more news, and then Wednesday a little bit more. Finally on Friday we get NFP, so this may be just the lull before the storm when things break out. So that may be the reason why we haven't moved very much today. And it'll be an interesting NFP, I think, this week. We'll have to go and wait to see, but you know, it's just lots of things out there. I know that the markets right now on the equity side there, because of some of the preliminary data that's come out, I know they're a little concerned because there's rumors in the air of that dirty word stagflation, which we haven't used in a while, but the idea of stagflation means that the economy doesn't grow, and yet we have inflation concerns all at the same time. And if that sets in, that's probably the worst type of data that can actually come out. So I think there's some fears out there right now that may be a possibility of where we're moving to. And some of the reasons why is because the stock market's going up, Bitcoin is going up. When I say Bitcoin, I just mean cryptos in general. And yet at the same time, there's not really a big decrease in the number of jobs available in the U.S., but at the same time, the number of jobs is not increasing. Productivity is not increasing, which means that with the number of people working, there should be plenty of room for production to be able to go up. So that kind of means that the orders are down. So that's I think the big fear that's out there. It's like, oh, okay, we've hit the top. Are we now in a bubble in the stock market? Are we in a bubble, in all those different types of areas? And at the same time, oil is starting to drift up again. And, gold, for whatever reason, still is stuck in the same old range that it's been stuck in for the last, I don't know how many years. But, again, that's another indication of stagflation because we're getting inflation, yet at the same time, we're not getting growth. And, inflation is, it's never really good, but at the same time, you need it to grow. But when you get inflation without growth, that's a really bad problem because that means the consumer and even businesses are now in a situation where they're paying more and yet they don't have any increased income to go and pay more with. And so it creates situations where you start to run into, bankruptcies and such, the things that we just don't want to see in any type of economy because once that happens, it's incredibly hard to break that cycle.
Yeah, have you been getting those emails? I guess maybe because I'm in the preparedness echo chamber, all these talk about banks failing and, predicting doom and gloom, currency crashes.
I have not gotten any of those emails, but I don't put my email out there that much. It's out there in some places, but I don't have it really broadcasted far and wide. But it wouldn't surprise me, because right now, that you look at the car market right now. The auto industry is in a situation where these car manufacturers, went and increased the price of the cars unjustifiably during the pandemic, to the point where now people can't afford cars. And the people who bought the cars back then are upside down on their cars so badly that, cars are starting to be pulled off the street, and repoed all over the place. And with that situation, obviously the consumer who lost their car, they get hurt. The other person who gets hurt is the bank. They get hurt badly because now they're sitting on a car that they lent out, let's say, $50,000 for, but it's got a true value, of only $15,000 or $20,000, and only $5,000 of it's been paid back so far. They're now underwater just as bad as the consumer was. And so now, if you get, you're a bank and you went and wrote all those loans, now you're sitting there with a huge problem. How are you going to go and survive that type of a loss, that type of a drawdown? And it's not a good situation for those banks. And yet some of these car manufacturers, I listened to one guy who I have come to trust over the years, and you look at Stellantis and what some of the things that they're doing, they're selling less cars than they've ever sold in their life, and every time you turn around, they're raising the prices. It's like, what are you guys thinking? You're not going to be able to price your way out of it. You go out to a Ram dealership, and literally you need binoculars to see the end of Ram trucks because there's so many out there.
Well, what else?
They're raising the prices.
What I saw, something about leasing used cars.
Mm-hmm.
It's kind of, I don't know if that whole idea about, you will own nothing and be happy, but when you look across the board, so many things that, when we were in our 20s and 30s, we almost took for granted.
Right. Yep.
That you could buy a house, you could buy a car, you could afford it, but it's looking really tough for those people in their 20s and 30s right now. In fact, if any of the listeners out there in their 20s and 30s like to hear your views, send us a note in the comment section.
Yeah.
Because this is just, it's awful. Unless you make a lot of money, I guess in a STEM type job, or maybe you're a plumber or electrician, you got a good your own company in the trades. I just don't see how you can make ends meet. I guess that's why so many people are living in vans down by the river.
It's funny because my grandfather told me, it's great you're going off to college, but make sure you learn a trade before you go. And I did, and I'm glad I did. I never had to go and use it, but there were a couple times when I'm sitting out there looking at the economy, and I said, you know what, it'd probably be a good idea maybe if I would step back. And, my grandfather, he was a master carpenter, furniture quality type stuff, and he taught me that, and I spent probably 10 years with him learning. And I'm glad I learned it because it's helped me long term. But there were a couple times where, I may need to fall back on this.
Yeah, it's rough out there.
Yeah. So
go ahead.
Must be coming to the end of time here.
Yeah. The fastest 15 minutes in trading's just about over. I've got the chart up where I've got the highs and lows and midpoints, and let's see, and the closes for the last 5 trading days, and we're on the H4, looking at it using the H4 candles. We're in between the high from 2 trading days ago and 3 trading days ago. So, and price just seems to be stuck here, hasn't moved much. So, fellow traders, that's the fastest 15 minutes, and trading's just about over. So remember your risk management, and always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.